Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. If you have any questions after the webinar or at any time, the best way to get in touch with me is Discord. My name in Discord is Doug P. And also, you can post questions, content, all related to options, order flow, hedging flow in the Options-Doug chat channel in Discord. And then I'm also on X, formerly known as Twitter. My name there is @DougPless. So this is the best way to contact me. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. For setups, for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. And the setups can be taken with futures, shares of stock, or options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. And again, if you have questions, comments after the webinar, post them in the Options-Doug chat channel in Bookmap Discord, or you can contact me, Doug P, in Discord. My agenda for today, what I want to go over is news items, economic data, events, and earnings for today, as well as the remainder of the week. Then I'll go through my positional analysis. Then I'll review some setups from this morning, and then I'll talk about the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, so let's start with news items, economic data. First of all, there was some data out at 10 a.m. today. The JOLTS data and consumer confidence both came in less than expected, lower than expected, and apparently the market liked that. Tomorrow, ADP comes out at 8:15 a.m. That's the ADP employment report. GDP at 8:30 a.m. Eastern Time. And then on Thursday, the PCE data comes out at 8:30 a.m. Eastern Time. And then Friday is the jobs report, the first Friday of the month at 8:30 a.m. Eastern Time. All right, so that's the data for today. Market interpreted the data as bullish. And then a couple of key events next week, this week, key data reports, PCE on Thursday, and the jobs report on Friday. All right, let's get started with positional analysis now. So let's take a look. Start with Bookmap. This is, excuse me. Oh, excuse me, had to sneeze. This is the S&P 500 futures. Wow, what a day! And we'll go over this in a few minutes. So before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to a Thinkorswim chart so I can see a larger time frame here. This is the SPX in a 30-day 1-hour chart. And let me point out some things on this chart. First of all, this rally began on Friday the 18th. That was the monthly options expiration for August, and that was a somewhat of an equal call dominated, put dominated, slightly put dominated rally. Anyway, there were puts that expired. Market was in a very negative gamma position, market maker's position on the gamma curve, very negative. A lot of puts expired. Traders were long puts, market makers short puts, short futures to hedge their position. And as price began to move higher, those puts quickly lost value due to charm and Vanna. Drop at the passage of time. They were expiring that day, as well as the drop in implied volatility. And the rally continued up until last week, right the day before Jerome Powell spoke at the Jackson Hole Symposium. Price dropped pretty significantly. And then when the market interpreted Jerome Powell's comments as not as bad as expected, the rally resumed and continues today. So SPX trading now well above the upper daily and weekly expected moves. So the lower and upper weekly expected moves shown with the dashed purple lines, and then the lower and upper daily expected move shown with the dashed blue lines. That information comes from the options market. And then note also there are some key Spotgamma levels on this chart. I'm going to point out the key daily levels. These are shown with the dark red horizontal lines. First of all, there's the put wall at 4,300. That is the strike with the largest net negative gamma that can be expected to act as support. And the next level up is 4,400. That is the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. Then just above that is the volatility trigger at 4,420. That is Spotgamma's proprietary gamma flip level. Below that level, market maker's position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX trading now well above that volatility trigger, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue volatility. And then finally, the call wall now has dropped down to 4,500, so that is the next strike in play. It looks like that is imminent. The 4,500 call wall, that's the strike with the largest net positive gamma that can be expected to act as resistance. And note that level did drop again from 4,600 yesterday to 4,500 today. And the volatility trigger moved up slightly from 44.15 to 44.20. So those are the shifts in levels for SPX. And normally I would interpret that move lower in the call wall as bearish, but not today. All right, so those are the daily levels and weekly levels, expected move, as well as the Spotgamma key daily levels. All right, this is the S&P 500 ES futures in Bookmap. And I have my cloud notes here where I have the SPX levels. So there's the 4,500 call wall. I also have SPY levels. Here's the 442 volatility trigger for SPY. That level did move up slightly from 440 yesterday. And note that level was the support level at 8:30 a.m. Eastern Time. And that was the maybe the launching point for this rally to move higher that really gained steam with the cash open at 9:30 and then the 10 a.m. data. All right, so that is the, and there are a number of levels in between. So again, SPX levels, 4,500 call wall. Note there is a difference in price between ES and SPX, and it's varying today between 8 and 9. So ES minus SPX is, let's say, around 8 to 8.5 right now. I use the round number 8. So I'm showing the SPX 4,500 call wall at 45.08. And here is the, so let me mark the key levels. So there's the SPX 4,500 call wall. Here's the SPY 446 call wall. Note that level did drop lower yesterday pretty significantly from 446, from 460 to 446 today. So again, I would normally interpret that as bearish. And other levels in between, upper daily and weekly expected move there. So the range again, the SPY 442 volatility trigger, and the right now it looks like ES is just right around the ES 4,500 level, and the SPX 4,500 level definitely in sight for today. All right, so those are the levels for SPX SPY on the ES chart. And again, shifts in levels, volatility triggers shifted higher for SPX and SPY, call walls shifted lower. All right, let's take a look at NASDAQ. So here are the NQ futures. And I'm going to take a look at a couple of charts in Thinkorswim here just to get a picture of what's going on today. So first of all, this is QQQ. And just like SPY, the volatility trigger for QQQ at 366 acted as support right around 8:30 a.m. Eastern Time, and then price accelerated higher at the 9:30 cash open, and again at the 10 a.m. data. So that is the volatility trigger for QQQ. That did move higher from yesterday. And then the next level is 370. That's the call wall for QQQ. So that is the level that's expected to act as resistance. QQQ is paused briefly at that level and is trading now significantly higher. That at 370 level is also the absolute gamma strike. All right, let's take a look at an NDX chart. And now the reason I'm looking at all of these index products, SPY, SPX, QQQ, and NDX. Options trades in these products are a key driver, typically a key driver of price action in the ES and NQ futures, and also the gamma levels at these index products are where market makers are expected to react. All right, so let's take a look at one final chart, NDX. So this is a 1 day, 1 minute chart for NDX, and just to point out, this 15,000 level, I've talked about that the last few days, has definitely been in play, and now NDX has broken out well above that level. Note also an interesting move higher in the put wall for NDX up to 15,175. So from 12,500 yesterday to 15,175, actually above the call wall. That happened last week. That happened last Thursday, and quickly moved back down to the 12,500 level. So you know, an odd move higher in the put wall for NDX. All right, let's go take a look at NQ. Take a look at the levels in play. So again, you can't see the label here, but there's the support at the QQQ 366 volatility trigger. There's the upper daily expected move, the 370 call wall, and the upper weekly expected move. Just a brief pause at those levels. So big move in NASDAQ. Those are the levels in play. Next level up is the QQQ 375 level. All right, shifts in levels again for QQQ. The volatility trigger shifted higher. Also the put wall shifted higher. And for NDX, the put wall shifted higher. All right, let's take a look at some additional information I use in my positional analysis. First of all, gamma notional. Market maker's position on the gamma curve at the beginning of the day was still negative for SPX, SPY, and QQQ. So this indicates that at the beginning of the day, traders with long puts, market makers are short puts, and they have to trade with price to hedge their delta exposure. I normally don't look at NDX. It is just not significant compared to the other numbers. So again, gamma notional for SPX, SPY, QQQ at the beginning of the day, still negative, but less negative than yesterday. All right, let's take a quick look at the Vanna model. We can see what this means in a graphical representation here. I'm going to take a look at the SPY Vanna model. So what this chart is showing is market makers delta notional, delta exposure on the vertical axis, price on the horizontal axis. There are two curves on this chart. The gray curve is showing how market makers delta notional changes with changes in price only. Remember, market makers want to remain delta neutral. So if their delta exposure increases, they have to sell futures to hedge their delta exposure. On the other hand, if price decreases, they can buy back their short futures. The purple curve adds implied volatility to the equation, showing how market makers delta notional changes with changes in price and implied volatility. and that is the Vanna effect. Vanna is a second order Greek. All right, let's take a look at, so this was the low 442 at 8:30 a.m. Eastern Time. Remember, that is the volatility trigger for SPY. So that was the low at 8:30. So this is showing that there was somewhat of a Vanna tailwind for price moving higher. So right now SPY is trading right around 448. So that is right around this level right here. So right at the bottom of the curve. So helping to fuel the rally higher today, this put Vanna as implied volatility drops and price increases, market makers delta notional decreases, and they can buy back short futures. So that was definitely helping to fuel the rally this morning, but that it looks like that Vanna fuel, put Vanna fuel, has been used up. So with the SPY now trading again right at the bottom of this curve, there is no more put Vanna rally, put Vanna fuel, according to this chart. So as price increases from here, that will be a slight headwind. Market makers delta notional will increase as price increases, and they will have to start selling futures to hedge their delta exposure. So we know also that SPY is trading, SPY, SPX, QQQ, NDX, all trading above their volatility triggers, and I would expect if this rally holds for today that this gamma notional would most likely shift positive for SPX and much less negative, if not positive, for SPY and QQQ. All right, so I'm going to leave it there. So that was the that's my positional analysis today, looking at the levels, potential areas for market makers to react, and also the gamma notional Vanna rally, and then my job after that is really to figure out what's driving the market. So let's take a look at one thing in this is a heat map of the S&P 500 and NASDAQ, and when all these stocks are green like this, large cap tech stocks, semiconductors, Tesla, Amazon, most everything red, very green, green, indicating that these stocks are moving higher. The index products, S&P 500, NASDAQ, are going to move higher. So large cap tech driving price higher today. Let me take a look at one other thing. All right, so also bonds are moving higher today, so yields are moving lower, and that is certainly helping to drive large cap tech higher. With I see the TNX here is moving lower. Let's just take a look at one other thing here. Here's VIX. Take a look at VIX for today. Looks like VIX may have found a bottom so far around 14.45. Take a look at the 10-year note. Also moving lower, yields moving lower. Helping to drive large cap tech higher. All right, let me check for questions. All right, so Andrew asks, how do we add the section where it says C levels to Bookmap? All right, so what Andrew is asking about is this right here. So this is my my Cloud Notes, and I use an add-on that's available in the Bookmap marketplace called Price Lines. So I have added all the information I want to see in this CSV file. I pointed to it, and I have to update that information every day. So I update all the levels that I want to show, the SPY levels, SPX levels, and those the ES to SPY ratio changes a little bit every day. I have a script in Thinkorswim that calculates that, and then I also have in a watch list just the ES to SPX difference. So I account for that in my spreadsheet. Here it is. So this is all the information that I want to show. Here are the SPY levels, SPX levels, and the upper and lower weekly and daily expected moves. So this is price lines, not price levels, price lines available in the Bookmap marketplace. And then the gamma levels, Spotgamma levels, come from Spotgamma. I like to see them in one column in my own Cloud Notes here, so I do it manually. And then I have also other levels, round number levels for SPY and SPX. All right, so Truman asks, are the daily Bookmap Cloud CSV notes and the daily ThinkScript levels both from Spotgamma the same data? More or less. I think there are. So first of all, let's go to Thinkorswim. Zoom in on today. So these levels here, that's a Spotgamma level. Those are available from Spotgamma to Spotgamma subscribers. And Spotgamma provides a ThinkScript every day, and there's some manual intervention here. I have to make a copy of the ThinkScript, and then I'll go in and edit the ThinkScript with the new data. So I'll just delete the ThinkScript, the old ThinkScript. I leave the name, I edit, I paste in the new ThinkScript, update it, apply that, and then I get the new levels on my chart. And these levels, this upper daily and weekly expected move, I do that manually. So I just draw those on my SPX chart here every day. So that's Thinkorswim. It takes a minute or two to update the chart. And then again, for Spotgamma subscribers, Spotgamma provides Cloud Notes for Bookmap, but I like to see my own levels, just one column where I have SPY levels, so that Spotgamma Cloud Notes just have SPX levels. And I want to see one column with SPX levels and SPY levels and any other levels I want to put in. So Truman says, Bookmap has a link for the CSV. Could I just point my Cloud Notes URL box to that link? Yes. So you can just open a new column, make it Cloud Notes, and then paste in the link for the Spotgamma Cloud Notes, and you have the Spotgamma Cloud Notes. Again, I want to see all the information in one column, so I just have my own Cloud Notes. All right, Truman, I hope that answers your question. All right, let's take a look at some setups right now. So I'm going to start with Hero. Let me just show one thing. This is from yesterday. Give me just a moment to find it. All right, this is from yesterday. So this was an example of the Hero signal, again from yesterday. So this chart is showing price for SPX with a white line, the Hero signal for all expirations with the purple line, and this is a combined signal for SPX, SPY, XSP, and ES futures, all into one combined signal showing options trades and market maker hedging activity. So the purple line is all expirations. The green line is 0 DTE, options that expired at the end of the day yesterday. And this is just pointing out, and Spotgamma has pointed this out recently in their founders notes, that this suppressing action with 0 DTE options traders buying the dips and selling the rips tends to subdue volatility. That will, and if you recall yesterday, both the S&P 500 and NASDAQ traded in a pretty narrow range. It was about a 2-point range for SPY for the SPX, for the S&P 500 trading in a 2-point range for SPY. And a large part of that was due to this volatility suppressing action of 0 DTE traders. So you can see as price was moving up yesterday, options traders were taking negative delta positions, and then as price moved down, they started taking positive delta positions, and when price got to the same high again, they started taking negative delta positions. When the price got to the same low, they started taking positive delta positions. So selling rips and buying dips, and tending to subdue volatility. So that was yesterday. So we'll take a look at today. So again, this is the Hero signal, hedging impact real-time options. This is available to Spotgamma subscribers. This chart is showing, again, SPX price with a white line, and this purple line is showing a combined signal for all expirations for SPX, SPY, XSP, and ES futures, all under one combined signal. Options trades, market maker hedging activity. All right, let's zoom in on this chart. So today, let's take a look at the next expiry, which would be the 0 DTE, and that subduing action of options traders is still there, but not as prevalent as yesterday. And note the close correlation between 0 DTE and the green line and the purple line showing all expirations. Very close correlation, indicating that 0 DTE trades are making up a large portion of the total options volume today. All right, let's turn that off. So generally, it looks like initially options traders were taking negative delta positions, and then they got on board with the move higher right around 10:10, 10:15 a.m. Eastern time. And since then, it's been up and down. So if anything, all of this has done, this up and down action after about 11:30 or so, 11:45, has slowed slowed price down. All right, so I guess the best you could say for this is the options trades, market maker hedging activity hasn't had the volatility suppressing action that it did yesterday. All right, so let's take a look at Bookmap now. Oh, let me go back to Hero again. Zoom in on this. We'll take a look at calls and puts. So what this is showing, and this helps to understand drivers of price action, traders are buying calls. That's shown by the rising orange line. Note the positive notional value there. And they're also buying puts. That behavior really went on till about 10:30, buying puts, and then this line has really leveled off since then. So they're not, as of 10:30, really not buying or selling puts. That hero line is leveled off. That number is negative notional value indicating traders buying puts. So it looks like from an options point of view that call buyers have really been driving price today. And note they were buying calls from the open. That has continued higher, but at a somewhat slower pace. All right, so when we slice and dice this hero signal, it gives us a better understanding of what's driving price today. All right, so let's go take a look at Bookmap. Again, the 442 volatility trigger acting as support. Move higher at the cash open 9:30 a.m. Eastern Time. Then another boost with the data that came out at 10 a.m. We'll zoom in a little bit. So looking at order flow here, what has been driving price, you can just see all the green dots here, green volume dots. These volume dots are showing aggressive buyers, market buy minus sell. This is what drives price higher. Market orders moving price higher. Again, volume dot showing the delta of buy minus sell. Green dot indicates more buyers than sellers. That's also shown by the rising cumulative volume delta line, that line that changes from pink to dark blue. And then the rising yellow line is showing buy stop orders helping to fuel the move higher. And those are also shown by this on chart indicator here, these small green dots are showing buy stop orders helping to fuel the move higher. We'll zoom in on this a little bit more. So after this push higher that began around 11 a.m., note the liquidity coming in. The heat map is showing a history of the limit orders, the passive limit orders in the order book. And note all the buyers coming in. So first of all, they came in as price moved lower, just above the upper weekly and daily expected moves, coming in again at 11:30 to 12, right around 44.88, coming in again And then the sell orders start to come in at 4,500. So there are buyers around 44.90, and right now sellers in the order book just above 4,500. And note some large iceberg orders coming in. These are what large traders use to hide their size. That's shown by the light blue line in the subchart. That number right there, that's 4,551 contracts executed in 6 different transactions. That's a large set of iceberg orders. Large traders in there selling at that 4,500 level. All right, so obviously the setup today was just to find any way to get long. Look at any pullback, find a way to get long. All right, let's take a look at NASDAQ now. Pretty similar story. Again, the move higher at the QQQ 366 volatility trigger, 8:30 a.m. Eastern Time. Buyers rush in at the cash open, and then the move higher at the 10 a.m. data. Order flow, pretty similar drivers. Let me just tone down the, whoops. I'm going to tone down the heat map here a little bit. Make this price action a little bit easier to see. All right, so pretty similar to the S&P 500. Aggressive buyers. Note all the green volume dots there. Market buy minus market sell, green dot, they're more buyers than sellers. Shown by the rising cumulative volume delta, that's the pink to dark blue line. Also the rising yellow line showing buy stop orders helping to fuel the move higher. Note the numbers going to be a lot smaller than the S&P 500. 526 for buy stop orders, that's pretty significant though for the NASDAQ. More buy stop orders fueling the move higher, and large traders have been selling this with iceberg orders. So far they're not getting their way, maybe slowing price down a little bit. So let's see what options traders are doing. So let's go to NASDAQ. Right, Truman, I'm not sure I understand your question. He asked, do I use stops? And if so, what is your calculation for the amount of stop? So do I use stops personally, or are you talking about do I look at stops as part of my, let's say, confluence or confirmation for a trade? And the answer to both questions is yes. And my own personal stop is, I guess, beyond the what I want to talk about on this webinar. I'm talking about a bigger picture, and your stop that you use may depend on the size you trade, the size of your account, your risk tolerance. So, but yes, when I trade futures or shares of stock, I do use stop orders. When I trade options, when I buy or sell, when I buy put or a call, I do not use stops. That's the beauty of using options. It's a defined risk trade. The stop is already built in. All right, so let's say I bought a call today. I would not have used a stop. There's no need for it. Again, it's defined risk. If I bought a futures contract, then well, so Truman, yeah, that happens sometimes. Truman says just ask him because he got stopped out on NVIDIA when it had a lot to go. So stock, generally I may use a stop of $1 or $2, depending on the size I'm trading. And depending on the stock as well. So if I'm trading Apple, I'm trading Apple versus NVIDIA, Tesla. NVIDIA, I'm going to trade smaller. Tesla, trade smaller with a wider stop. And for Apple or AMD or Amazon, lower price stock that doesn't have the range of movement compared to NVIDIA or Tesla, I'll trade larger size with a tighter stop. Same for SPY or QQQ. I'll use larger size and tighter stop. So again, a way to avoid that altogether is just to buy a call or buy a put and not worry about having a stop. All right, let's take a look at NASDAQ. So NASDAQ, this is a combined signal for NDX and QQQ. Let's see what options traders are doing. I'm going to separate out puts and calls. So pretty similar to the S&P 500. Traders are buying calls, shown by the rising orange line, positive notional value. They're also buying puts, shown by the falling blue line and the negative notional value there. So call buyers really more aggressive today. The call buyers notional value is 922 million positive versus minus 457 for puts. So call buyers more aggressive, definitely helping to drive price higher today. When traders buy calls, market makers sell the calls, and they have to buy stock, or in this case futures, to hedge their delta exposure. All right, so that's NASDAQ. And for both the S&P 500 and NASDAQ, the options trades, especially looking at calls versus puts, definitely provided a confirmation or a confluence, helping us to understand what was moving price higher. Stocks. Some stocks were definitely easier to read. So let's take a look at some stocks now. I'm going to start with NVIDIA. And if you recall yesterday, NVIDIA had a quick drop down, about a 10-point drop. That was good, very good for short. And then around 10 a.m., NVIDIA began to rally as options traders started taking positive delta positions. So I'm going to zoom way in on this. Just to show what I saw early in the morning. So right around 9:40, 9:41, 9:42, options traders started taking positive delta positions, and price responded. So the very strong correlation, confirmation between options trades, market maker hedging activity, and price action in NVIDIA. Let's go take a look at Bookmap. So here's NVIDIA, one of the key drivers of price action in the NASDAQ and S&P 500 today, especially NASDAQ. I'm going to zoom in. Just about the first 90 minutes here. So notice the order flow was pretty bullish right from the start. You could see the shift in volume dots here. A few market sell orders. So some aggressive sellers down around the 465 level, and then the aggressive buyers start to come in as options traders started taking positive delta positions. They were buying calls and selling puts. We'll go back and take a look at that in just a minute. So shift in order flow here, pretty easy read. Just go long at 465 there. That was a fantastic entry. And one thing to point out is right around oops, I shouldn't have done that. Let me zoom back in. Sorry about that. So right around 9:48 a.m. I've got that highlighted here. Right around 9:48. There was an alert in Hero. Let's go back and take a look at that. So for some reason, the alerts are, zoom in on this chart just a little bit, the graphical point of alert is not shown on my Hero chart here in Windows, but it is on my in Chrome on my Mac. So I'm using Chrome on Windows, Chrome on my Mac. Not shown here, but there was an alert that came in right around 9:48. So it was a Hero alert. One of these Hero flow alerts. It was a green one. I assume that's bullish. These are new. First time they were they were available maybe 6 weeks ago, but I think they were only available to a few users, beta users. I was one in that group. And then I know Spotgamma has continued to work on these. So that alert was right around 9:48. That was a bullish alert. At first I thought it was too late, but you know, looking in retrospect now, it was pretty timely. And that's not so the alert came in right around here, and that was definitely a good alert, bullish alert. Let's go back, take a look at Bookmap. So it looks like now NVIDIA has stalled around the 490 level. Huge move from 465 up to 490. All right, Truman says there's a beta with large options trades. That may be what I have. I guess so. So I'm part of the beta group. Yeah, I have not watched the. Truman is talking about the subscriber Q&A. I don't have time to watch that live. It typically starts at 1 p.m. Just a half an hour before my session starts, and then I just have to wait for the recording to watch it. So I'll maybe the recording will be available this evening, and I'll watch it. All right, so anyway, valuable alerts. So Truman, I assume you're not seeing the alerts. All right, so anyway, very bullish day in NVIDIA. Let's go back to Hero. So note that as this Hero signal has leveled off, so has price. separate out puts and calls. So today traders have been buying calls, shown by the rising orange line, and also selling puts, shown by the rising blue line and the positive notional value there. All right, so that's NVIDIA. I thought that was the stock trade of the day, just like the last few days. Very, very easy read, both in hedging flow and order flow. Looks like my time is almost up. So there were, we could take a look at any number of stocks, all large cap tech stocks. Not clear, not as clear for Meta here. But still bullish hedging flow, bullish order flow. Microsoft. Also bullish, but not as clear as NVIDIA. Let's take a look at Tesla. Call buyers, also put buyers. All right, let's check on the S&P 500 and NASDAQ now. S&P 500. All right, traders still buying calls, also buying puts. These numbers have been much higher. I've seen the call number up to 6 billion. It's at just under 2 billion now. I think I've seen that call number up around 6 billion. Very high number. So this is could go much higher. Let's go take a look at we'll take a look at NASDAQ real quick, and then we'll take a look at Bookmap. So this call line has leveled off. Again, traders buying calls, buying puts, call buyers in charge. Call line is leveled off for both the S&P 500 and somewhat for NASDAQ and S&P 500. Let's go take a look at Bookmap. Go back to the S&P 500. All right, so far, SPX somewhat trapped between the buyers here around between 44.87, 44.90, and then the sellers right around 4,500. Now looks like moving their orders up just a little bit to 45.02, 45.03. Again, large traders selling with iceberg orders, shown by the falling light blue line. Large iceberg orders, 4,500, 1,300. So progress higher so far stalled. If price continues higher, next target up at the 4,500 call wall, and then the 45.10 liquidity just above that. All right, so Kitatech asks, how do I anticipate if my level, like a volatility trigger or expected value, would work as resistance or support? So generally, I assume that if a level is tested from above, so price moves down to a level, I assume, but don't act on it immediately. I assume that level will act as support. and then I'm watching order flow to confirm that. So that doesn't mean I put a buy order there necessarily. I'm assuming that that level will act as support if tested from above, and then for example, the call wall here at 4,500, I assume that will act as resistance. That is, the put wall and the call wall are typically put wall support, call wall resistance. So my assumption is if put wall or volatility trigger tested from above, it'll act as support, and then of course the call wall if tested from below, so price moves up to that level, I assume it will act as resistance. And Spotgamma has stats that show that that is the case for put walls and call walls, support and resistance. But then I'm always watching order flow and price action to confirm that. Take one last look at NASDAQ. So we know call buyers have taken their foot off the gas and price has stalled right around the 15,400 level. All right, my time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. And I will see you tomorrow. Thanks again. Bye.